Hi everyone. In this video, I can show you how to manage your option positions. It's not about giving entry, rather how to handle on the expiry day. You might have created a position at the beginning of the month, at the beginning of the week, but on the expiry day, you may have to take a critical decision, either to allow it to expire or we need to manage, especially if it is at risk, how to handle it. That's what precisely the idea to explain. And I'm going to show you by taking a live example because we had given a recommendation a week before and it was optimized for the risk adjusted returns. But now that particular strategy at a marginal loss. So what I supposed to do to handle this particular expiry? And I will be very realistic in terms of showing you this. So let me get into give you the details. So let me first give you what was the original strategy here. And if you read this particular strategy here, the strike price what we have taken is 18,000 put option, and that we purchased for by paying 44.95, and we sold a couple of 17,850 put options by which we got 40 rupees back, and we did buy 17,750 put options by paying 12 rupees. So put together this 4 rupees of the debit and adding another 12 rupees, and this particular strategy happens to be with a maximum risk profile of 18 rupees is what the strategy. So this strategy makes us to yield money if market goes below 18,000, and if you see that the profits will grow till 17,815, but if market shows any drastic cut below 17,750, the profit gets limited to 31 rupees. So in a way that this is a fairly good strategy for someone who had a bearish view in the market. And if market goes up on the side, we are going to lose 18 rupees. So on the risk adjusted returns, it seems to be very appealing. So this was the strategy. But now I can give you on what rationally we formed this particular strategy. If you look at the day at which we initiated the strategy, which is 2 days before, which is on Tuesday, we formed this particular strategy, which is, I believe it is 26th December. Today is 29th December, which is at expiry. And if you look at that particular strategy, it is optimized for the bearish expectation. So let me quickly give you an idea on what basis that particular strategy has been created and why that we have taken a risk of 18 rupees and how we were planning for the downside. Let me talk about it. And if you look at that particular strategy, if I take a daily chart, you might have noticed that the market was on the corrective note and it did started recovering here. And if I take that particular intraday chart on that particular day, okay, if you look at on 26th, okay, now whatever you see is actually the 26th day behavior, okay. And if I go for the 1 minute or a 2 minute charts here, you can notice that the market opened there and witnessed a sharp cut. Again, it recovered on a corrective note. The point is, on Tuesday, market did open on a gap higher note, but it couldn't sustain. It witnessed a cut, and Asian markets were fairly doing well. And towards the, especially if you look at this, the behavior around 11:30 to 12:30, it is with the anticipation of the European market behaving, because the global markets are actually on the positive notes. But the Indian markets, if you look at even on Monday or even Friday, a week, I mean, few days before, the markets are actually underperforming. Although the global markets were able to sustain, that the Indian market showed. So there is a kind of weakness. So number one, we had a call that even if a market goes up, it may not get a free hands of going up. So that is anyway, it is limited. But there is a domestic weaknesses there. So by any chance, if the global optimism coming for a stagnant area, immediately this will fall like anything. So we wanted to make sure that if a market, especially Nifty, goes down by 250 points, we should be at a comfortable note. But we didn't expect the market to have a very, a strong free fall, because the likely area where we expected the market to expire for this particular week is anywhere below 18,000 to 17,900. So we wanted to form a strategy which optimized that particular area, because there is a domestic weakness, right? So what we did in line with that is to come up to form a strategy which buying 18,000, and it happened. Okay, the reality is now, if you look at the screen, and if you go to the intraday charts today, if you look at the intraday charts today, and even we also formed the expiry day strategy, may be available in the video link. So you can definitely go and browse it, where I actually highlighted that intraday at early day, the weakness was pretty good. Okay. So, and market is testing at 18,000. So this is where the point is. If market is at 18,100, 18,200, the market is not given any scope of managing the positions. Am I right? Whereas the market is at 18,000, and this is where the problem lies as a trader, that if market is at 18,000, my MTM will be in profit, because if market goes down, we will be making a profit, and our profit potential is close to 100, 150 points. Whereas if the market is actually going up, we are having a risk limited to 18 rupees. So eventually, if a market is at 18,000, on the probability terms, it is going to have a profit. But the point is, the problem is, now if you look at it at EQSIS, from 10:30 onwards, okay, and today from 10:30 onwards, this is today's chart, okay, and if you look at this from 10:30 onwards, when although it managed to break the bottom, couldn't sustain, rather it recovered, and then it becomes a corrective behavior, we now see that the market got a scope of settling between 18,030 to 50, or even slightly above 50 to 18,100. In that case, we are now risking 18 points. Okay. Now, remember, we are not talking about the multiple lots. We're talking about single lots. So in this case, 18 points into 50 is what kind of, 750. And we recommended people to take a stop loss of 15 points anytime when a strategy hits a 15 rupees loss, you exit it. But this is not easy to lose that 15 rupees, because on expiry day, if there is any unexpected volatility, if a market is going below 18,000, there is a scope that we can make some good money. That is the reason why the MTM is not showing as any big negative. Rather, it is always trying to show some the positive signs. Okay, coming back to a one thin line, many of us are thinking that managing option strategies makes us to be successful. It's not really true. By managing positions, okay, by adding more positions, let's say if I go and keep adding positions, very likely that we end up taking more risk towards the expiry. The planned risk is only 18 rupees, but by any chance, if I want to write one more call options just to take the premium and to reduce the risk of the original strategies, I'm opening my positions to become undefined, and the client may get surprised. That is the reason why at EQSIS, while we create a strategy, most likely we optimize it really well. Towards the end, we are very hesitate to actually manage positions. So the point at this particular time is, although you see that EQSIS got a bullish view, okay, on the intraday perspective, and likely to see the market to settle between 18,000 to 18,050, around 18,050 or slightly higher, we are still hesitant to take, nothing wrong in taking that 18 rupees risk or a 15 rupees risk, where market is around 18,000 and market has a potential of making 100 points more. So on the way upside, you're still losing 18 points, but on the way downside, you have a potential of making even 100 rupees. So it's worth holding the positions what we originally created. But such a comfort, you don't get it to form strategy towards the end. So this is a video which talks about how to manage positions which created a few days before, and what to do at the expiry day. But if you want to know how to create an expiry day strategy, we posted another video on the expiry day itself. Maybe you can check out the most recent videos and you see how we did that particular one, how we managed that particular risk and everything. So I hope you find this particular video useful, and do provide your comments and do share your expectations that what sort of video you want is from EQSIS in the below comment section. Hopefully the time you spent in this video was very useful. Thank you.